When will these guys rise back up from the ashes? Well, I'm here to give you a little bit of an insight as far as my view on silver and gold and what's been happening. Now, you guys might have been looking at your silver stack and wondering, what is going on? Did I make a poor decision here based off of what you saw happening last week? Now, as far as last week is concerned, I think it's a blip on the overall radar, and I'll show you why with some data. But first, let's talk about what caused it. And I have some notes here to kind of help me out. It's my cheat sheet. But basically, what caused silver to drop? Rising dollar and rising U.S. 10-year Treasury note yields in response to the latest U.S. job numbers and ISM services data. They rose aggressively in an environment where U.S. positive economic surprises have been falling, according to the Citigroup Economic Surprise Index. Now, you may be wondering, well, what exactly is that? Well, that is this. Let me scroll up to it. And pretty much since the middle of 2020, the Economic Surprise Index has been falling. So what exactly is that? Basically, when you see the graph rising, that means there is an overabundance of unexpected positive US data coming out. When it is dropping, you are seeing an overabundance of negative US data coming out. And of course, from time to time, you'll have little ups and downs happening in between. But the long-term trend here is fewer and fewer positive economic surprises. However, on Wednesday and Friday, we had some positive economic surprises. But when you see a graph, a long-term graph like this, what does that tell you? Well, it should tell you that they are simply blips on the radar. That job numbers, those jobs number, the jobs numbers and the ISM services that came out on Wednesday and Friday are caused the US dollar and 10-year note yield to rise aggressively because they were blips on the radar. They're just like, wait, where did this come from? Where did this positive data come from? Let's go into the dollar. Let's go into the US 10-year Treasury note yield. And you start to see them rise aggressively in response to that, because what we should be expecting is just general negativity. Now, here's the interesting thing. The US 10-year Treasury note yield specific to this rose with that positive data. Now, if you take a look at this, there's actually a pretty strong correlation between the US 10-year Treasury note yield and the Citigroup Economic Surprise Index. They're pretty much in lockstep with one another. So if one rises, the other one rises. If one falls, the other one falls. And the long-term trend here is we've seen this graph falling and this graph falling this year. However, at the start of this year, we started to see the surprise index rise a bit, rising along with the US 10-year Treasury note yield rising a bit. But then they both kind of start to fall together around the same time. Now, remember, in the beginning of 2021, what did we see? Well, let me give you a brief reminder here. Here is a graph of silver. And in the start of 2021, going into April, we saw silver heading down. Let's take a look at gold. We really saw gold heading down during that time. And then had a double bottom there. And then it started to rise back up into the middle of May, towards the end of May. Remember that, because we're going to refer to that later on in this video. And here, the same thing happened with silver. Let me move it over so you can see. Went up and pretty much right around there. Had some nearer term highs. So around that time when we saw the economic surprise index rising, we saw the US 10-year Treasury note yield rising. But now they both have been falling. And the U.S. 10-year Treasury note yield began falling around April. Again, right around the time when we saw gold and silver start going up. So, what have we been seeing? What did we see on Friday and on Wednesday? We saw the U.S. 10-year Treasury note yield rise. I'm sure if we get the data for the economic surprise index and zoom in, we could see that rise. And what else did we see? We saw gold and silver fall. So with that relationship, if the U.S. 10-year Treasury note yield falls and if the economic surprise index falls, we should expect to see gold and silver come back up relative to that. Now, why do I feel so sure that that may happen? Well, again, if the overall trajectory recently has been pretty much down for the economic surprise index, and not just with the economic surprise index, but also with both the economic surprise index and the U.S. 10-year Treasury note yield for pretty much recent months, we should expect gold and silver to rise. And that's pretty much what we saw, except for one wrench thrown into the system. What was that wrench, you're asking? Well, remember I said gold and silver hit those near term highs around mid to late May. Here is some alternative data that we can get from Google Trends, which shows around the end of May to present, we start to see a huge rise in search terms for Delta. So also around that time, we saw cases in the US begin to rise. And here is where we are currently. Believe it or not, in the US, we have pretty much gotten as high in cases as we did back in, it looks like, January. So cases are rising dramatically in the US. And with that, around that same time when gold and silver were rising, we had the 10-year break-even inflation rate rising and hitting a year-to-date high of 2.54 around May 12th, around May 17th, and then it starts to drop a little bit. Now, what is this graph here? What does it represent? Well, simply put, the latest values that you will see on this graph implies what market participants expect inflation to be in the next 10 years on average. So why is this important? Well, if you zoom all the way back to the last recession here, if this thing actually updates, you'll actually begin to see, there we go, that post the financial crisis, we got up to about 2.61, probably a little bit higher, 2.64, in April 8th of 2011. And honestly, it hasn't really gotten that much higher. It's actually been on decline, but then it started to rise aggressively after 2020. So we are expecting, market participants are expecting higher inflation, generally speaking. But that expectation dropped after we started to see this guy come into the picture. So what exactly am I trying to say? What I'm trying to say is that this guy here is basically in our way. And once he starts to abate in the United States, I expect that we should have one less hurdle for gold and silver prices to continue their ascent. Remember, the yields are essentially dropping along with the positive U.S. economic data. Now, this guy has been this, external confounding variable thrown into the mix. Once he gets out the way, we should get back to where we were in mid-May, which is where we left off, which were higher prices. So, do I expect gold and silver prices to continue rising in the future? Yes, I do, but I do think they will begin to rise once we start to see this guy here start to abate. So guys, let me know what you think about all this. Let me know what you think about the economic surprise index, and check out my video at the end of this video regarding the drop in prices on Friday.